Hi, I'm Pattu from FreeFinCal, and in this video, let's discuss 8 reasons to never invest in real estate. A real estate investment is on the minds of practically everyone who has just started earning, and if they don't think about it, someone else in the family will tell them to start thinking about buying a house and so on. But it's very important to distinguish between investing in real estate and buying real estate for self occupation. I have no problems with buying a house or a flat or even a plot which you will later on use to live in later. That's different. I'm talking about a real estate investment, which means that you intend to use it to get rent, or you intend to hold on to it until it appreciates and then you will sell it off. So most of us need to borrow to invest in any kind of real estate. Whether it is even if it is buying a home, most of us need to for ourselves home for ourselves. We need to borrow. So why do you want to borrow to actually invest? Then to get a profit from it, the margins become so much more difficult. And if you're going to borrow and to invest in a property that you will rent out, then there will be the EMI that you will pay will practically more or less cancel off with the rent that you get. In fact, sometimes the EMI will be even more because the rental yields themselves, as I'll talk about later, are very poor. And if you want to buy the land in the hope that it will appreciate in future, then you're taking a big risk because the market itself is unknown. It's not like a stock market where the price of the property of the commodity or the stock or whatever it is, it's well known. Everywhere it's the same price. Within the exchange, the price is fixed. But real estate is not like that. You talk to one person in the west, they will tell you one price. If you talk to one person in the east, they will tell you one price. It's an unknown dark market, and you're borrowing to invest in such a dark market. So this is even more riskier than investing in stocks, in my opinion. So I will not do that. And once I buy real estate as an investment, it will skew up my asset allocation forever. It will be the biggest chunk in my asset allocation. My equity and fixed income will be very small. It will be a more. I have seen portfolios where 70-80% of assets are in real estate. That is, I'm talking about real estate purchase for investment, not the self-occupied property. Self-occupied property is not an investment. It is a commodity that we use every day. So we cannot treat it as part of our net worth because we are never going to sell it, right? Unless we have a serious issue in our life, we will never sell it. So in asset allocation, you should not include real estate. So this is the problem. It will skew up your asset allocation. You will never have enough equity. You will the rental income will barely cancel off with the EMI, and even that's not possible all the time. Then you will never be able to increase the equity exposure and fixed income exposure. That is your liquid asset that you can liquidate at any time, and you will never do that unless you sell off your real estate. It will always be disproportional in asset allocation. Like I said before, I do not know the present value of the stock of the house. It's not like a stock. If I buy the house, I have seen people, they'll have a house somewhere else and they'll say that house is now worth 1.5 crores, 1 crore. But when they actually go to the market and try selling it, nobody will pay more than 75 lakhs or 80 lakhs for that house. So that's like, so it's the perceived value is actually different from the actual value, and the actual value itself, there are no regulations at all. They can say whatever they want. It's completely arbitrary. How can one invest in something like that? When I want to sell, it's not liquid enough. I mean, I'm not saying it will never get sold, but suddenly if I want money and if I want to urgently make a sale, if I sell real estate, more often than not, it will be for a loss because I want money fund. I want money fast, and if I want to sell, I will have to take that hit. Stocks are not like that. If I have 1,000 shares of, let's say, HDFC Bank, and tomorrow I need some money, I can liquidate 500 of them at market price. I know the price. There's no problem. There's a fluctuation in the market price, but that is well known. I can see it. The fluctuation in real estate market price is unknown. Everything is unknown. Appreciation is unknown. You will only hear stories of people say, I made 25% there, 30% there, and so on. Unless you know what you are doing and you are in a position to actually haggle and you know how to, make the deal. Real estate is not for soft-spoken people, especially people like me. I don't know how to bargain. I cannot even bargain for a bag of vegetables. How will I bargain on a real estate? Even after you sell, real estate is not liquid. Now the problem is that you will have to, unless you, if you sell a property, unless you use that money to construct another property or buy another property, you have to pay long-term capital gains tax. If you want to escape long-term capital gains tax, previously, up to the previous financial year, there was a 3-year lock-in period if you buy Section 54 EC bonds. The bonds, of course, had a very small interest rate. It will be basically like putting money in the bank, but it's locked in for 3 years. But now the lock-in has been extended from 3 to 5 years. So most people will not pay tax. Of course, if you actually pay the tax, it's not going to be too much. It's just be a few lakhs. But I have seen families, they say, oh, so much lakhs. So they would have got a crore almost by after liquidating the real estate. But when they actually want to pay 20-25 lakh tax, they'll say, oh, that's a lot of money. I will not waste that money to the government. So they'll lock that money in for 5 years. So it's not liquid even after sale. Of course, I keep saying liquid. Liquid means two things. One, you will not, it's locked in, you will not be able to get the money, and you will not be able to get the money at a fair price. That's what liquidity actually means. There are emotional attachment issues associated with real estate. Nobody gets emotionally attached with stocks. They don't sell some. I mean, I've seen people who don't sell bad stocks, but you invest in a stock with the hope that you'll get profit, right? But in a real estate, very few people are able to buy and sell real estate without emotional attachment. The people will buy, many families, especially middle class families, they will buy a second house or a plot or something, and they'll say, okay, I will give this plot to my son, I will give this plot to my that house to my other son, they will take care of me in the future. This is the kind of mindset that I'm seeing people having. And that's very dangerous. You are making an investment, and if you make an investment, you must think logically before you invest, when you invest, and after you actually come out of the investment. If you do not do that, there's going to be a problem. And real estate is prone to emotional attachment. They think, oh, it's land, you should not give it away. Oh, don't sell real estate. That kind of problems are always there. This is a point my friend Muthukrishnan pointed out, told me. There are many risks before possession. I mean, you can buy a flat, then somebody will put a case on it. The builder will not give you the flat possession in time. There will be problems with water, sewage, etc., etc., etc. They will tell you some features, but those features will not be there, and so on. There are huge risks, and these are not risks you can correct on your own. These are risks beyond your control. And last is the risk of renting out. See, if you actually calculate rental yield, which is defined as annual rental income divided by cost of the property minus expenses, that will come to, for most properties, it will come to anywhere between 3%, 4%, 5%, 6% if you are super lucky with the rent. This is like saying, if you take the money which you spent, the entire money which you spent for buying that property, and put it in your SD account or liquid fund or arbitrage fund, you will get the same amount as rent. You will get the same amount, the gain, the capital gain or the interest that you get each year will be equal to the amount that you get in the annual rent from that building. I mean, that makes no sense at all. And recognize, at least these instruments are well protected and guaranteed to some extent because they're safe instruments. Rent is not like that. The fellow can go away anytime. Then I know many retirees, they are reluctant to sell and their house is vacant because nobody is coming to for rent in those places for various reasons. No income. What is the use of that property? Then the fellow, even if you have a clear agreement that fellow may not come out, may not move out if you want them to go, then you will have to adopt legal means to do that. So it's a headache. Real estate is a headache. Please do not invest in real estate. Focus, you have just started earning. Focus on investing in liquid assets. Focus on investing in equity as much as possible. At least 60%, 70% of your portfolio. Rest in fixed income. Do not invest in real estate. If you want to buy a house for occupation, that is, if you want your family to live in that house, that's fine. That's no problem. That is not a real estate investment. Many people get this wrong. So do not invest in real estate. Many people will disagree with me, but that's fine. Um, so, well, I'll catch you again in another video. If you have any thoughts against this or in support of this, please leave them as a comment below. If you like this video, please share and subscribe to the channel. So I'll catch you again.